Welcome to the debate. Our material today, well, it outlines a really powerful narrative of economic growth, strategic reform, and technological advancement in India. The central claim, and this comes straight from the text, is that the nation's achieving what's called a profound quantum jump, basically seeking to shift from past failures, the whole missing the bus idea, to really taking the driving seat in global economic growth.
And yeah, that framing really sets up our core question, doesn't it? While the scale of change is, it's clearly visible, the question we have to explore quite rigorously, I think, is whether this current trajectory is, in fact, a fundamental quantum jump, one resulting from decisive, commitment-driven reforms that truly break with past limitations. Or is it perhaps primarily a very rapid incremental leap, maybe driven by accelerating foundational investments and, let's face it, a pretty favorable global context? And that might require closer scrutiny on some of the claims around long-term stability and deep self-reliance.
Right. And I'll be arguing that the evidence really demonstrates a profound, commitment-driven shift, both philosophically and systemically. It's a quantum jump. That philosophical change is the quantum part, I think.
And I'll argue that while, yes, the growth is tremendous, undeniable really, the data suggests more of a rapid acceleration, an incremental leap. And those claims of deep stability and comprehensive self-reliance, they need careful nuance, maybe more specific definitions.
Okay, so the evidence for this quantum jump, it starts with a fundamental shift in governance philosophy. The idea is that reforms are now a deep commitment, right? Not just something you do when there's a crisis, a compulsion. And this change, well, you see it first in macroeconomic stability. Despite the extraordinary global stress of the COVID crisis, the estimated fiscal deficit is robustly contained, looking like it'll reach 4.4%. Now, that's not just managing a crisis. That's demonstrating real fiscal control when other major economies frankly buckled. And this foundation is reinforced by a controlled current account deficit, the CAD, and strong forex reserves. And crucially, external markets seem to validate this resilience. S&P Global upgraded India's credit rating after nearly, 2 decades? That signals a long-term belief, I think, in the nation's structural strength. Furthermore, strategic sectors, they're showing unprecedented acceleration and autonomy. Just consider the solar PV module manufacturing capacity. It leaped from a pretty meager 2.5 gigawatt to 100 gigawatts. And critically, the conscious decision to develop the full 5G stack domestically and deploy it rapidly while already planning for 6G, that confirms a decisive break from the kind of technological dependence we saw in the 2G, 3G, and 4G eras. That level of strategic autonomy, well, that's pretty much the definition of a quantum shift.
I come at this stability argument from maybe a slightly different angle. While I absolutely agree the speed and scale are remarkable, calling this structural change a quantum jump, well, it risks accepting surface-level metrics as proof of really deep transformation, doesn't it? Take macro stability, for example. You cite controlled deficits, which is fair, but the material's argument for low inflation as proof of stability, it needs perspective. It specifically says retail inflation is at its lowest level since 2017. Now, that 5 or 6 year window, it's just too limited a time frame, really, to measure the kind of long-term structural price stability you'd need to claim a true fundamental macroeconomic break from the past. And moreover, let's talk about employment for a second. The massive formal job creation, like that record 22 lakh jobs added in the June EPFO data, it's encouraging, definitely.
But we have to rigorously distinguish between formalization, bringing jobs into the formal sector, and total net job creation. This data often reflects, how the economy is organizing itself, the transition of workers from informal to formal. That's an important incremental step forward, absolutely, but it's not necessarily a quantum leap in full employment that kind of breaks past constraints on labor absorption. And finally, this idea of Atmanirbhar Bharat, self-reliant India. It's framed by speed, scale, and scope. The material highlights incredible scale, 400 crore vaccine doses built in India. But true self-reliance, surely that has to be defined by the indigenous content, the domestic inputs, not just the high volume of assembly, right?
Okay, let's deepen this discussion on macro stability and maybe challenge that skepticism about the timescale. You focus maybe a bit narrowly on inflation just since 2017. But you might be missing the broader structural change that's validated by that S&P upgrade. An upgrade after 20 years, surely that signifies that external analysts see a fundamental change in debt management and fiscal predictability, not just, short-term price control. This commitment to fiscal discipline, proven by containing the deficit to 4.4% despite a global pandemic, it demonstrates a political willingness, I think, to prioritize macro health over maybe short-term electoral gains. And that feels like a philosophical commitment that perhaps previous administrations often lacked. And regarding domestic confidence, let's talk about the retail investor. You have millions of domestic investors putting thousands of crores into the market every single month through SIPs, these systematic investment plans. This massive, consistent flow of domestic capital, it's a fundamental insulating factor, isn't it? It means our market stability relies less on, let's say, fickle foreign institutional investor capital, FII money, and more on local savings. Isn't that kind of structural insulation, a shift from external vulnerability to internal resilience? Isn't that the very essence of a quantum jump?
That's a compelling argument about the, let's call it, protective layer from SIPs, and I do acknowledge the importance of domestic capital. However, macro stability still needs to be defined rigorously, I believe, across various economic cycles, not just by capital inflows, however strong they are. You cite strong forex reserves as a pillar of stability. And you celebrate achievements like, ours 1.2 lakh crore in annual auto exports. Fantastic numbers. But relying on strong reserves, doesn't that suggest that stability is still fundamentally linked to external trade conditions, to capital flows? Meaning we're managing global volatility expertly, which is, that's incremental excellence, rather than being truly insulated by purely internal structural changes. And furthermore, let's just circle back quickly to the employment argument. While formalization is welcome, absolutely, it needs to be framed correctly. Okay, that's an essential step towards better social security, better data. But it doesn't necessarily solve the core structural problem of, say, youth employment in high-skill sectors. To call that a quantum jump, well, we need definitive proof, I think, that the underlying industrial policy is generating millions of brand-new, high-value jobs at a rate that really breaks decisively from previous employment cycles, not just, improving the data quality on existing structures.
But you're defining the quantum jump maybe too narrowly there, demanding instant, total autonomy. The philosophical shift is precisely about addressing those historical, regulatory, and strategic failures that prevented high-value job creation in the first place. The material, it clearly shows a definitive break from that missing the bus approach. Look at the examples. The 2G era's strategic failures, the lost opportunity for semiconductors 50, maybe 60 years ago. Those weren't just bad luck. They were systemic failures, rooted in policy paralysis, maybe a lack of vision. The current government, it seems, has made a clear choice to jump into the driving seat. How? By committing to Made in India 5G, 6G, by rapidly establishing semiconductor factories. We're apparently expecting the first chip by the end of the year. This demonstrates a strategic mindset that prioritizes technological autonomy. We're building the foundational capacity now. That capacity building is the quantum leap, even if the full ecosystem takes a few years to mature completely.
I'm still not entirely convinced that just establishing assembly capacity or attracting foreign fabrication units constitutes a quantum jump away from that historical regulatory complexity. While the current urgency to get the chips ecosystem going is laudable, absolutely, the underlying difficulty remains, doesn't it? The acceleration we see in solar power, hitting 100 gigawatts capacity, well, that often involves utilizing very sophisticated global supply chains. And this brings us right back to that core definitional challenge. What is made in India versus what is merely assembled in India? You see, if we're simply scaling up assembly operations using imported critical components, whether it's for solar panels or telecom gear, then yes, we're achieving scale and speed. But have we achieved genuine self-reliance? Real autonomy? The true philosophical jump, I would argue, requires deep domestic production of those critical components. The polysilicon for the solar modules, the advanced lithography components for the chips themselves. Until that deeper localization happens, the achievement feels more like a massive, incredibly fast incremental leap, but one that's still built on existing global infrastructure. And that still leaves us potentially vulnerable to geopolitical supply chain shocks.
I appreciate the nuance you're bringing to the definition of autonomy, I really do. But the current strategic move is precisely the kind of non-incremental first step you need to achieve that deeper localization later. You can't just build the whole ecosystem from the ground up by, passing a law. You have to first prove you can handle high-volume manufacturing capability. Building 100 gigawatts of solar capacity, even if it relies on some external components initially, it fundamentally changes the economics for localization down the line. It signals to component manufacturers worldwide that there's a guaranteed massive, profitable domestic market ready to absorb their products. And that, surely, makes it viable for them to eventually set up their own deeper fabrication units here. That shift in market signaling, that's the strategic quantum jump. And moreover, the depth of reform, it's holistic. It's tackling both strategic sectors and governance. Let's look at the systemic changes. The space reforms, they are revolutionary. It's not just about launching 60-plus missions in 11 years. It's the deep structural change, opening the sector to private players, ensuring transparent spectrum allocation, providing massive support, including what? A 1,000 crore venture capital fund for over 300 startups now? That's deregulation and public investment working together really effectively. And this philosophical shift, it extends right into governance reform. Legislative changes like John Vishwas 2.0, they're foundational to this whole quantum jump idea. We're talking about decriminalizing over 300 minor offenses, many of which were just business compliance headaches. This is about replacing an atmosphere of sort of fear and bureaucratic harassment with trust-based governance. And when we simplify a 60-year-old income tax law, we reduce compliance costs, we reduce regulatory uncertainty for millions of businesses. That fundamentally accelerates the ease of doing business, that move away from state coercion towards state facilitation. That's the engine, I think, that permits sustained rapid growth.
Look, the commitment to simplifying bureaucracy is undeniable, and the growth in the space sector, yes, it's truly impressive. However, we still need to be careful not to equate efficiency gains with fundamental structural transformation. Let's focus on targets for a moment. You cite the success in achieving the non-fossil fuel capacity target 5 years early, hitting the 2030 goal by 2025. Okay, while this is certainly successful acceleration, it does force a critical question, doesn't it? Was the original 2030 target sufficiently ambitious in the first place?
If a target designed to be met over a decade is surpassed in just 5 years, largely through accelerated investment and execution, the success might actually indicate that the original goal was perhaps a bit too cautious. Or maybe that the system was already capable of this level of investment and deployment, it just needed the push.
The true quantum jump needs to be measured, I think, by achievements against goals that genuinely test the absolute limits of structural capacity, goals that require what seem like impossible leaps, not just by meeting targets quickly, even if that acceleration itself is excellent incremental planning.
That line of critique, while useful for assessing goal setting, maybe fails to acknowledge the necessary precondition for that acceleration itself. Achieving the non-fossil fuel target 5 years early wasn't just about throwing more money at it. It was about rapid, transparent regulatory streamlining. It was the removal of the very structural blockades that, for me, define the quantum jump. We moved from a hesitant, maybe slow policy framework to one that could absorb massive investment efficiently. That change in regulatory speed and efficiency is the structural reform that enables the very acceleration you're calling incremental.
I maintain that while regulatory efficiency is clearly a powerful accelerator, the foundation of the claimed macro stability and the true self-reliance underpinning these manufacturing leaps, these remain areas for ongoing, rigorous evaluation. The limitations of using 2017 as an inflation baseline, coupled with what looks like a persistent reliance on external trade conditions for stability, suggest that while the nation is certainly accelerating at an unprecedented pace, a definitive break from all previous structural limitations, the true quantum jump, well, maybe that hasn't been fully secured just yet.
So to wrap up my view, we have established, I believe, that the current trajectory is rooted in comprehensive reforms and a real philosophical commitment to autonomy. This is driving tangible macro stability and strategic leaps in key sectors, from space right through to telecom. The massive scale and speed we're seeing, backed by that S&P upgrade after 2 decades, and profound internal confidence shown by domestic capital flows, for me, that defines this period as a fundamental change, a quantum jump in the nation's potential and its execution.
That's an interesting way to frame it, though. I would perhaps put it slightly differently. This whole discussion really highlights the tension, doesn't it, between impressive growth statistics on one hand and the need for sustained, deep structural resilience on the other. We certainly agree the speed is historic, but whether this speed is fundamentally self-sustaining or if it's still reliant on expertly managing global conditions, that remains the crucial area where the incremental leap perspective demands closer scrutiny than perhaps the quantum jump label implies.
Indeed.
And our discussion today, I hope, illustrates that understanding these complex national trajectories requires assessing both the visible speed of change, which is remarkable, and the depth of the underlying philosophical and structural foundations that allow such speed to hopefully be sustained. There is certainly much more to explore in the material regarding the long-term impact of these monumental reforms.